On today's show, 3 questions we're going to answer. Number 1, what is happening with inflation, jobs, and markets? Number 2, is Dave Ramsey right about the cost of childcare? Number 3, are you also having issues with your loan servicer? Welcome to Dentist Money's 2 cents, where we help dentists navigate all the noise. I'm Matt.
I'm Will.
And I'm Rabih.
Boom, guys, we got it. One of these weeks, we are going to do this without technical difficulties. Today, for those of you listening, it was the internet goes down right before we started, and so that was fun. But here we are. How's everyone feeling?
Feeling great.
Feeling good. I'm a little worn down on a Friday, but we're going to go. So, Rabih, let's start with what is happening with inflation, jobs, and markets.
Yes, so since the beginning of the year, not much information has come in except a reading on CPI related to December, and the start of the earnings season, as well as we can always look at the market and see where it's going. So I thought of giving you guys an update. A week and a half ago, we got the CPI report of December showing us what the inflation is at. The inflation rate year over year came in at 3.4%, which is higher than what was expected. The forecast was 3.2 because November was 3.1. So those are like short-term fluctuations. But the fact that inflation came in higher than what was expected, the market actually took it negatively and had a couple of days of selling off simply back on the news. Regarding core inflation, the record for November was at 4%. The forecast was 3.8, continuing, the overall downward trend. However, the actual inflation number came at 3.9. It's silly that we're like worrying about a 0.1%.
I was just thinking that.
Right? But the market is highly sensitive to that. And the fact that inflation came a little bit higher than what was forecasted was more of a mini obstacle in the rally that we have been. But however, it looks like it's been recovering. Earlier this week, the earnings season started, and a bunch of companies, their guidance have been, there's going to be a slowdown, and the economy is not as robust as we used to think it is. So most companies and across multiple sectors have been actually laying off workers. And while might that's not be good news for the economy, it is actually okay news for the market. And we will talk about that in a second. But off the list of companies that are laying off people, last year we saw a big layoff wave in the tech sector. This year it's expanding out of it. But we can start with Google laying off, Discord, Citibank, Amazon, and then we've got Nike, we've got Macy's, we've got Intel. So BlackRock, as you can see, it's rent the runway. So it's mainly consumer discretionary, banking, tech, where layoffs are happening, which are usually sensitive industries that are indicators of an economic slowdown. And this means
what are you trying to tell us, Rabih?
It just means that we've been raising interest rates for a year and a half. We need it to propagate into the market and the economy. It is propagating into the market and the economy. This doesn't mean low stock market returns for like the globally diversified investor. And the reason is when you are investing in the stock market, you are taking the position of the owner of capital. You're not taking the position of labor in the economy. So when actually labor is laid off, this frees up expenses of your income statement, and this makes up your profit numbers look even nicer. It's not sustainable because without employees you can't really make more profit, but for the short window that we are in, for this one print of income statements and balance sheet statements, it'll actually look even nicer simply because employees were fired. And this is kind of manifested in what the S&P 500 has been doing. It's always been teasing the all-time high. We're still not at the all-time high. However, we are on an intraday level trading above the all-time high. So the all-time high for the S&P 500 is around the 4780-ish level. We are currently trading at 4800 levels, which is above. However, in like the market, rules of thumb, it has to close above that level. It's been fluctuating above it and then closing below. If it does close, that would be a really bullish sign. And then we will see going forward in the next week or two how earnings come and where does the narrative of like inflation for a little bit longer and market doesn't like it, or an economic slowdown for a while and market likes it, and how that pans out.
Rabih, you just said something interesting. You said that closing at an all-time high would be a bullish sign, meaning good for the market.
Yes.
Can you talk about that for a second? Because I think that's a bit counterintuitive when people talk about investing. That I think most dentists out there would hear all-time high, they get a little nervous. They're thinking, oh, it's going to come back down. I guess it's kind of a natural thought. So when you say all-time high is bullish, what do you mean?
So there are, I would say, two main like arguments in favor of an all-time high. The first one, the market can go sideways and it can go down, and there are more reasons, usually because of our pessimistic behavior, to go down than go up. So when it actually prints a new level that is higher than everything that preceded it, just tells you that the market knows information or is pricing in forecast predictions that are actually good about the future. It might be either lower cost of capital and discounts rates or higher cash flows in the future. And this just means that more businesses are making money and the economy is expanding. The other point that's, I would say, argument in favor of the bullishness of an all-time high is not related to like the aspect that there is information in the market that we don't know of. It is more about just the historical nature. Like if you look at the historical performance of markets and you look at it from like a frequency perspective, like what percentage of the time has the market been an all-time high? Over 80% of the time it's an all-time high. Unless it's selling off because of bad news, it is an all-time high. And markets usually, and like I would say volatility in the markets comes in clusters. So you'll either have a period where there's high volatility like COVID or election period or a certain bank sell-off, and all this volatility clusters in a certain number of months, or volatility doesn't exist and returns cluster in a good, decent amount of period. So usually when the market goes into the trend of breaking all-time highs, those newer highs cluster together. So a sign of making an all-time high is an indicator of more all-time highs coming along the way. It's not really a sign that tells you, okay, the market is too high, I should actually get out of it. The indicators regarding whether the market is overbought or is overvalued are not measured whether the market makes an all-time high. It's actually measured by spreads about its earnings and its fundamental value and how much the price is deviating from that.
I feel like all-time high is a misnomer because it makes you, the sentiment of it is like, oh, like this, it has to go down from there. Like it's at the highest it can ever go. But it's like most all-time highs, like you said, Rabih, are replaced within a day or two, you know, like they're just, but I think people anchor to the fact like all-time high means bad thing, like you said, Matt, but it doesn't. It just means that's the current all-time high and it's probably going to get replaced because if we're in a bullish run, it means we're headed upwards.
It's so true, Will, and I think this is a result. I mean, we hit this point all the time that it's the culprit here is, I think, financial news. Typical financial media, they love to use, as you put, Will, this misnomer of all-time high as financial fodder to like hit the, and they use it kind of in this ominous, like, oh, we're at all-time highs usually, and at least from what I've seen, they tend to try to approach this from a negative. Like it's equal to what they do. A lot of these financial outlets do, these media outlets do. On the other end of it, where they'll use some random isolated variable or some random factor statistic, and they'll say lowest since 2008, right? And it's like some isolated variable that it's like has nothing to do with anything, but because they use lowest since 2008, people perk up. They want to read. They want to know what that means, and there's most of the time it's a spurious correlation. There is absolutely nothing connecting the two at all. So it's a good point, Rabih. I'm glad that you gave some reference to that and kind of gave some context to all-time highs. I love what you said too about the clustering of things. And this speaks to what we always talk about how the impossibility of timing markets because of the clustering nature. And we've hit this before of like exactly what you're talking about, but like you said, these all-time highs tend to come in clusters, and you have to know when those clusters are happening, or the volatility comes in clusters. and it's impossible to know when that's going to happen. So again, look no further than that fact to know that timing the market is that this is why we say it's impossible. So Rabih, any other thoughts on that? Inflation, jobs, markets, any other updates there?
Stay tuned for next week's earnings.
Ooh, I like that little teaser. little teaser.
Rabih in his turtleneck is unlocked kind of like beast mode. I don't know. He just feels like he's on a different level today.
Turtleneck beast mode. We call him Steve Jobs. Yes, Steve Jobs beast mode. Okay, we are going to jump to second question. Is Dave Ramsey right about the cost of childcare? Okay, so have you guys seen this video? Another viral Dave Ramsey video. Another opportunity for me to rail on him.
Yeah, we love it.
I won't go too far. Okay, video. I'll explain it really quick. If you haven't seen it, we did a Instagram kind of little clip of this recently, as the kids call it, a stitch. I'm hearing that we call these stitches. I don't know. We have a young team now. Every time we hire someone in their 20s, they're teaching me more and more about pop culture and social media. But so Dave Ramsey posts this video. Guy calls in. I'll just give you kind of the TLDR. Another little thing I learned from our young team. Okay, guy calls in, and he's talking about taking on some debt to help with, because childcare is so expensive, is kind of how he references it. And Dave starts asking some questions. And so again, the summary version is this guy's wife is in residency, medical, for medical school. She makes around $80,000 a year in residency. And then him, he makes about $110,000 or something, $100,000. So the total household income was about $180,000. And Dave immediately responds with, in true Dave Ramsey fashion, kind of being like, "You idiot. How are you struggling? Why are you taking on extra debt with this income?" That is a decently high income if you compare that to the national average. So, for dentistry, maybe not, but for national average, that's pretty good. The guy then goes on to say, well, childcare, they have 2 children and they're paying a lot for childcare. Dave asks how much. He says about $80,000 for the year. Right. So Dave freaks out and starts calling him an idiot. And again, the stuff that just bothers me so much about Dave Ramsey, but just says he's a moron. How could he spend that much money? Like, him and the co-host on the show just railing on this guy, and then don't let him respond. They cut him off and then they go off. So it got me thinking, how far off is Dave Ramsey? This guy spends $80,000 a year. He explains that he's got 2 of his kids in preschool, like daycare situations. They're both young, pre-public school age. And, but then in the summer, these programs are not running. So then he has a full-time nanny because they both are working.
Yeah.
I guess before I jump into anything, I'd like to get maybe your guys' response to the cost, the $80,000 for 2 kids. Just so you know, this guy lives in Philadelphia. I believe it was. I think it was Philadelphia. So major metropolitan area. What is your initial response? Just candid response when you hear that.
So what is that, like $1,500 a week?
Yeah. Is that right? I don't know. I didn't break it down weekly.
80 divided by 52. Yeah. 1,500-ish. Yeah. I mean, if you have 2 kids and it's full time, that's probably close to what it's going to cost for I think it's higher end maybe. And that's where it's harder because you can't really put a price on. It's hard for me to put like a price on childcare because you get what you pay for in a way. And so for me, like with our childcare, it's important to have the right person. And if the right person costs more, then so be it. Yeah.
Rabih, any thoughts? Well, Will, this is hitting close to home for you, Will. As you're getting close to go from 3 to 5 children here pretty soon.
We've been on care.com interviewing people the last couple of weeks.
Yeah. Rabih, any thoughts on this? Is the person in this, at least in this group, that does not have children?
Doesn't have children. Given
that we're going to say yet.
Yet. Okay. This is turning into like a matchmaking podcast, but given that I don't know what goes into the cost and the effort and the attention that childcare requires, I am taking a very ignorant stance here. And all I did was like, that's why I was like smirking a little while ago. We are financial advisors because everyone pulled up their calculator. Will was calculating how much it is a week. I'm taking the ratio of total income. So I did 80 but divided by 180, and that's like 44% of your income.
Yeah, that's expensive.
Just going to childcare. And for me, that felt high, but I don't know why it might be that high. So I'm really not the educated person on the subject.
Yeah, it is funny. It shows how nerdy we are that we immediately pull out calculators. But so my first response to this video, outside of Dave Ramsey being Dave Ramsey, was truly trying to be curious about, okay, 80, because we have 2 kids, we have a nanny, both my wife and I work. And so it can be difficult, right? It can be difficult, to your point, Will, finding the right person, making sure. And this guy admits, he said, yeah, we probably pay, we pay on the higher end for like the programs we have our children in. So he admits that. He admits like it's a nicer school that he has his kids in. And then in the summer, he's got a full-time nanny. But I started to think about it. I'm like, okay, 2 children, major metropolitan area. You both work full-time. So you're needing all day care, both during the school year and then in the summer. I was like, that's, yes, on the high end. But I was like, how far off is it? So did a little bit of research. We're going to give a shout out to our study buddy, Victoria. She did a ton of research on this. We're going to do kind of more content around this particular topic. But what she found in this study that she looked at, that the average childcare payment per household has risen over 30% since 2019. The biggest increase is among the upper middle class income cohort. So those with an income between $100,000 and $250,000. So the increase was the greatest for that group, which was this family that was referenced in this video. And then there's a breakdown. We won't go into too much detail, but she was able to find this map that literally breaks it down by county. And then we just pulled out a few kind of across the country, some different counties to give you an idea of what it would look like, right? So Teton County in Wyoming, infant center-based childcare. So like a daycare / preschool, whatever, per child for the year was $24,500 in Wyoming per child. So now we're talking $50,000 for the year if you've got 2 kids. That's just for that infant care, center. And if that's not running in the summer, then you're still working, you're paying for something else.
Yeah.
So not that crazy, not that far off, I'd say. Again, he's maybe on the higher end, but Essex County in Massachusetts, $21,000 per child.
Yeah.
King County in Washington, $22,300 per child. So again, this is just that daycare kind of average per kid. So I actually don't think this guy's that far off.
Yeah.
Childcare is wildly expensive nowadays.
Yeah.
And, Dave Ramsey in the video says, go find a free summer camp, put your kid in. And I'm like, please, Dave, tell us where those are. I would love to know where these free childcare, these free summer camps are.
Free summer camp. Ship them off for 3 months for free.
Free summer camp. Yeah. So anyway, I just wanted to give some context there of it, the reality, the actual data behind this before we just start bombarding people with insults and telling them they're idiots because they're spending $80,000 on childcare. Again, maybe that's higher end, but I don't think it's that far off. Childcare is expensive.
It's an interesting phenomenon too, because you think about, and we've actually done this with some clients who have our dual income clients. Maybe one's a dentist and one is a working spouse, but it's in a profession that's maybe making around that, like $60,000, $80,000, maybe $100,000. And the exercise that maybe this guy should go through is like, he's making $100,000. His childcare after tax, he's probably making, I don't know if 100 is pre-tax or after tax, but if it's pre-tax, then essentially he's working just to pay childcare. So that would be my kind of only thought there is, yeah, it's expensive. That's probably what it costs for them and to have the right childcare. But is there an argument that he stops working and they cut that expense and he takes care of the kids?
Will, I am so glad you went here. This just shows you the idea. This is a true financial planner with coming from a place of curiosity and not judgment, in the words of Walt Whitman / Ted Lasso. Like, you're coming at this from a place of curiosity and not judgment. Right? You're not making fun of this dude. You're not calling him an idiot. this is exactly when Victoria and I talked about this. We did a little clip on this for Instagram. And again, we're going to do more stuff on this. That's exactly that was my first thought was, hey, if this were a client, if this were a dentist client, to your point, Will, that's exactly the conversation we'd start having. And again, not telling him he has to stop working, but start asking questions around that.
Doing that mental exercise. Yeah.
Doing the exercise, running some numbers,
where's your income going? Is it going up?
Exactly. Yeah. Exactly. Like, your wife's in residency, maybe
income's going up. Yeah.
Her income's going to go up drastically. Is this something, again, just asking those questions around the trade-offs of you working versus paying that much money for childcare.
Right.
That is an incredible point. And again, I'm so glad that you went there, because that's exactly what I was thinking. And you're one of the smartest dudes I know. So now I'm like, okay, maybe we're somewhere on the same level. So that's a really, really good point. Those are the questions you want to start asking is, again, what is that trade-off?
Right.
And this person might say, oh, we've thought of that, but there's other things outside of money that I find with work, like other purpose or other whatever. And that's okay. But it's like, at least have that conversation, at least be thinking about that.
Sure. So
any final thoughts on that, Rabih? Anything from you? Cool. Robbie's like, if I was not going to have kids before, I'm definitely not having kids now. If that's how much it costs for childcare. So, okay. Last question. And then I should have mentioned this. I should have mentioned this at the beginning. We are going to finish this show. We're going to start trying this. I'm not going to commit and say we're going to do this every single show. We're going to test this out of finishing with a case study. So we'll finish that out to close the show out. But number 3 question, are you also having issues with your student loan servicer? Will, this was yours.
Yeah.
Break it down.
I got some interesting data. As the kids would put it, the student loan servicers have fumbled the bag.
Fumbled? I'm learning so much. Okay. Fumbled the bag. This is a new thing for the children, they're saying?
Yeah, I think the bag is like, the bag is supposed to represent money. And if you fumble the bag, then
fumbled the bag. Okay. Yeah. So I got it.
They just totally botched this restart. I think, the headline, I got just some statistics in like an email blast that I get every morning. And it said the headline was like, restarting an old engine can backfire. And it said 28 million borrowers resumed repayment, obviously in like September of last year. And 9 million of those borrowers missed their first payment, which is crazy.
Wow.
Like, I think 9 million people probably had a payment due that just didn't pay it.
Wow.
So, and then they did some other stats, like all these servicers are getting fined. So like AidVantage got fined $2 million by the Department of Education. Mohila got fined like $7 million over billing errors. And so they're like, I don't know how
and who's finding them? The government's finding them?
It says the education.
The Department of Education.
Yeah, right. I don't know how they're doing this. And that's why apparently like Navient is one of the big players here, and they left the student debt biz in 2021.
For good reason.
They probably had a good reason.
Yeah.
But I just think it's interesting. The other stat was in August, the average wait time to call these servicers was 12 minutes. And in October, it jumped up to 73 minutes.
Dang.
So just know you're not alone if you've been on hold. And actually, this is hitting close to home for me because I've gone through this process with, 10 to 20 clients that are having like weird issues with their loans. Like they thought they were on Save, or they applied for Save and it never got changed. And all these things where like interest is accruing and it's not supposed to be. And so they're calling and sitting on hold. And
dang,
it's really just kind of a bad deal. So
it's going to be interesting. This is maybe going to seem out of left field, but I think there's some aspect there's an impact here of this being an election year.
Yeah.
And we're not going to go into the election, but just saying like, this is a big deal. Like 28 million people in America struggle or having issues with this. Is that what you said, Will? 28 million borrowers?
28 resumed payment, 9 million didn't make their first payment. And like they did some poll, 54% of people had a negative experience with these servicers. 25% said it was terrible in every way. So I just think people are pissed about this.
I believe it. Not to mention you get used to not having to pay for 3 years.
Yeah.
And then not only are you mad that you have to start paying again, especially after, having some potential hope of some level of relief from the government, some forgiveness. and then that doesn't happen. Then the payments start, and then it's
And they're
just
not
an
even working
absolute
correctly. You don't even
then
know
it's
if
a
you're paying it.
mess.
Yeah, it's true. Yeah.
So I can totally see that. I understand it's not a far reach to realize or to understand why it's such a mess, right? Like these borrowers, we've talked about this before, they probably laid off their entire staff pretty much. Yep. And then the government kept kicking the can down the road. They probably kept calling, you know, it's like the boy who cried wolf. They're like, okay, cool. Yeah, it's totally going to start. Yeah, it is. Sure it is. Then it actually does. And
they got to rehire people that aren't trained. Yeah.
Not to mention, you mentioned it, Will, in the interim, there was consolidation. There was like all these different servicers who went away and they were consolidating. Like, I don't know when this is.
Repayment plans.
Yeah, the save plan.
Yeah.
Man, I guess my question is, when you talk about the 9 million who didn't pay, this is such a mess at the global scale. It's almost like, how do you you can't punish those 9 million people. What do you do? Like,
yeah.
And maybe that's what people are banking on. They're just like, this is such a mess. There's no way they're going to penalize me. I'm just not going to pay.
Right. It's a mess.
It is a mess. Rabih, what are you thinking here? You're nodding. You're all in this.
Yeah, I agree with you. And on one side of it, it does have like, it's a mess from a consumer perspective, right? But this has also been reaching consequences that are on like a macro level. So for the past couple of months before they restarted it, we were like looking and trying to find data sources that would tell us how much of when credit card payments resume, how much of a burden that will be on the American consumer in general, and whether that will affect consumer demand in the economy. And given the mess, they can't even bill people correctly. So imagine asking them for proper data regarding how many people went into delinquency, which ones actually defaulted. And those numbers are not clean. It's so noisy. And as macro people trying to understand and gain insights, it hasn't. So for the past couple of months, we know credit card, along with credit cards and car payments, because those are what we look at, student loan payments came back, but we can't add the numbers to the equations. We can't really look whether they have an effect, and we can't forecast how consumer spending is going to slow down. So until, they stop fumbling the bag, we will have some time in like an uncertainty. And, one day we might wake up and hear that one of these people actually went bankrupt. We're talking about like the credit loan people. So we'll see how it goes, but the more data we have, the better, and we're not in that position right now.
We're so hip using fumble the bag, and man, we're basically Gen Zers. It's a good point, Rabih. It is hard to get data and understand how this is going to impact anything, because what a mess that it is. So I guess that's the message on this one, is just, it's a mess. You're not alone, like you said, Will. You're not alone. Be patient. Hopefully it gets worked out.
If you have questions, ask us. Feel free to ask us. We're happy to talk with you about it. We can't solve it for you, but we can help you look at it and see if something looks fishy.
Help you research it. And for sure. Cool. Okay, guys, those were great. Those are hopefully helpful for everybody. We want to finish this show with a case study. Again, we're going to test this out, see what the response is. We're always open to feedback and advice. If you like this, if you don't, we'd love to hear from you. But here's the case study. So, guys, pay attention. I'm going to read this just to give some context for everybody. We get hundreds of people every year, hundreds of dentists, I should say, every year, reaching out to us to do what we call consultations. It's basically a way where we hear your story, we answer questions, we try to see how we can add value in some form or fashion for you. So what we've done is we start taking, when someone sets up a consultation with us, we send out what we call a discovery survey. And it's basically just a way for a dentist to kind of give us a little bit of information about themselves, their situation, their top concerns, and their experience with financial planning. So we've taken some of that data and we figured we can share this on the podcast and start going through the case study here. Let's see. We got a little chat here. Okay. Rabih's got to plug in. All right. So Will, I'm going to read this to you while Rabih's figuring that out. I'm a practice owner doing $650,000 in collections. I take home about $180,000. I have about $100K in cash, about $100K in investments. I have $270K left on my practice loan, $300K in my student debt. I'm saving about $5,000 per month. Top concerns: Number 1, paying off student loans. Number 2, investing for retirement. Number 3, planning to buy somewhere between $1 million and $1.5 million home in a few years. Number 4, understanding my practice numbers better. This person says, I don't have any experience with financial planning and investing. This is my first time speaking with an advisor. Will, do you have initial just thoughts or response? I guess I'll say this. What is maybe like something that jumps out to you about that case? And then like a couple of things that you would just maybe point them towards if this were someone you were talking to.
Yeah. Really great job of him at kind of him or her at laying this out and going through what their priorities are and what they're dealing with. But my first reaction is there's a lot of things to pay for and not a lot of money, right?
Yeah.
I mean, I think we go back to like 180,000 is a lot. It's a lot of money objectively. As a practice owner doing 650 in collections, that's about a 30% profit margin, which isn't stellar. So part A of this would say I would kind of bump number 4, which was understanding my practice numbers better, up to number 1 and focus there first before you try to go down this rabbit hole of paying off student loans, investing for retirement, and buying a $1.5 million home. So for me, that's how it's his order of operations is just backwards, where, understanding my practice numbers would help. Number 1, understand, can we grow collections and make more money? Can we take home more from the 650 that we're doing? And that's where I start, because like we always talk about the funnel, an income funnel. It always starts with how much money you make, and then it goes to debt, taxes, spending, and savings. And all of these things he's talking about are savings for retirement, paying off student loans, debt, buying a house, which is kind of spending and debt, and then understanding my practice numbers better. It all helps if there's more money to go around. That's my first reaction.
I mean, incredible, Will. We could probably just end it there. I thought the same exact thing on the order of concerns. All of these things, when it comes to money, cash flow, whatever it is, it's just understanding the trade-offs. And like you said, Will, there's only so much money to go around. When I see the 180,000, first of all, great job. Like solid amount of income coming in, but there's only, like you said, the order of cash flow matters. The order of priority matters, depending on how important each one of these are. They can't all be equally important. If every one of your priorities is important, then none of them are important. Like you've got to actually lay these out. What I would say, my first reaction when I read this was, first of all, excellent job on the cash and the liquidity and investments. They've got $200,000 between cash and investments. So that's pretty dang good. But I'm with you, Will. The first thing I would tell this person is number 4 priority you listed here, understanding my practice numbers better, should go to number 1. That is the lifeblood of everything that you're doing. And the only way you're going to be able to make any of these things happen is by understanding your numbers and increasing that collections number. I would say you've got to get that collections number higher. The other thing that stood out to me was they said planning to buy a $1 million to $1.5 million home in a few years.
Yeah.
I would say when I think about that versus the priority of paying off student loans, that would be a conversation that I'd want to have with this person of saying, again, we've got to line up priorities. We've got to figure out time frames, because you can't do both. You're not going to be able to buy that level of home, that price of home, and also pay off your student loans in an aggressive fashion.
Yeah.
So $300,000 in student loans, I don't think is unreasonable.
No, but it's a $3,000 to $4,000 a month payment on a 10-year schedule. Yeah,
exactly right.
And so the mortgage is a $8,000 payment on a 30-year mortgage. So there goes your whole. I mean, that goes 3/4 of your 180 right there if you're trying to do that.
Exactly. And again, congratulations to this person having a nice buffer, good, what we call free cash flow, $5,000 a month. That's awesome, especially with that level of income. You're doing an excellent job. But comes back to this idea of you've got to understand your numbers better and figure out how we can get those collections numbers up, and then continue to build liquidity. If your goal truly is to buy that level of home in a few years, as you put it, liquidity right now seems solid, but I would want to, you'd have to be putting as much money as you possibly can into liquidity and
maybe
probably put off student loans.
Maybe the practice loan that has 270 left. I don't know if that's 4 more years left on that thing or 5 more years left on that thing. Maybe when that's paid off, then you can start use whatever was going towards the practice loan to go into something else. If that's, but not until then.
For sure. Well, okay, that is our first attempt at a case study. We've lost Rabih. He has no sound. He lost his battery here. But Rabih, thanks for being here. I'd say, what are your final thoughts? But you can't give us those final thoughts.
So you just look nice and give us a nice look, and
you look
and a thumbs up. Yeah.
you look great, Rabih. So, Will, Rabih, thank you so much. We're going to end this like we will every single show until it happens. Dentist Money Summit coming up in June. I know our team is so tired of hearing about this. We talk about this all the time, but we are so excited about this event. June 20th through the 22nd in Park City, Utah. We are actually going to be having over the next few weeks / months, some of the speakers coming on the show to kind of tease the show or tease the event and what they're going to be talking about. So James Lawrence coming up here pretty soon. We're going to have him live in studio. We have Daniel Crosby coming in next month to talk to our team about his book and what he's going to be talking about at the Dentist Money Summit. So I am so excited about this event. Will, I know you're giddy. I know that's the word you would use. Fired up.
Yeah.
It's going to be awesome. So if you want more information, dentistmoneysummit.com. Check it out. We would love to have you there. Come hang out with us. Yeah, come join us. Come hang out. It is honestly going to be one of, if not the best dental event you've ever been to. I can say that. I've been to a lot, and based on what we were planning with the area, it's going to be amazing. So check it out, dentistmoneysummit.com. Will, Rabih, thank you so much. Everyone, thank you so much for listening. There's only one thing left to do, guys. Well, sorry, that was our 2 cents. First of all, now there's only one thing left to do. We all know what that is. Go forth and live your rich life. Till next time, bye-bye.